Hey everybody, JC Peretz here, founder of AllStarCharts.com, and I am joined, as always, by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
Hey, buddy. It looks like you got a little sunburn this weekend, huh? You spent some time outdoors?
Little bit, no big deal. A little springtime in the Northeast, getting some sun, no big deal. Um, you know, uh, this is a great time. I find myself outside in the sun, going for longer walks and things like that, and thinking about it. And there's some divergences out there in the market. Some of these growthy tech stocks, kind of underperforming, kind of acting more like bonds. Like Bitcoin is looking more like bonds than it does tech, right? Tech's kind of run away, and there's some that have been left back. So the question is, do we get some upside appreciation? Do we get some catch up, if you will? Like you can see here, the NASDAQ 100 making new 52-week highs for the last couple of weeks, and Marathon Digital Holdings, which is a crypto miner, kind of just being held back. So when you zoom in on the chart, we're kind of in the middle of this range. If volatility was elevated, I'd say sell out of the money calls, out of the money puts. But with volatility so low, that's probably the last thing that we want to do. So that doesn't make any sense. So the bet here is that this coil, this consolidation that we've seen here short term in Marathon and Bitcoin for that matter. So what does this trade say about our thoughts about Bitcoin? But if these consolidations in Bitcoin and Marathon appreciate to the upside to follow what the NASDAQ's doing, you could see $20, Shawnee. You like that.
I do like that. We've been talking a lot over the last week or so about, all these tech stocks. They've had some big runs, especially in the semiconductor space. Pretty eye-popping runs. But what's going to keep this bull market going is going to be sector rotation. And it feels to us that maybe some of these stocks that have exposure to cryptocurrencies and Bitcoin might be one of the next sectors to catch that bid in the rotation. And man, if it does, Mara, what really caught my attention on this one is, in addition to those charts that you just showed, the catch up that it could possibly play. Straza in our morning meeting mentioned that this stock has 40% of its float held in short positions. That
Yep.
blew my mind. And I said, holy cow, that's a catalyst. Now, that doesn't mean the stock's just going to rip higher, right? And we talked about that. You talked about that on the morning show this morning. Short interest doesn't mean that the stock's an automatic win. It just means that if this thing gets going, which we think it will, that short interest has to cover. Otherwise, they're going to get creamed, and that's huge fuel to push this thing higher.
Yeah, because remember, short sellers are just promising to buy in the future, right? That's what a short seller is. It's a
Right.
future buyer by definition. That's how they close out their positions. Shareholders are just future sellers. So kind of keep that in the back of your mind that I think gets lost. So, and Sean said it, just because there's extreme short positions, 40% of the flow is short, again, doesn't mean that it's a buy simply because of that. It just means that if it gets going, it could really, really get going. Fun fact, Sean, is that Marathon has a beta of 5. So that means that that this thing moves at 5 times the volatility of the S&P 500. That's what that means. So needless to say, it's not for the faint of heart. And then to take things one step further, in case that wasn't quite enough juice for you, here we are going out and buying some out of the money calls in Marathon. That's the trade that we're putting on, buying Marathon out of the money calls, the 14s. And if this thing goes to 20, I want to talk about the process in a second. If this thing goes to 20, this is a grand slam. When we were talking about it, Sean brought up the 14s in September, which were cheaper. And I wanted to give us more room. That might prove to be right or wrong, but I felt a lot more comfortable with this trade, giving it 4 additional months. How'd you feel about that?
No, I liked it. I was originally drawn to the September 14 calls because I just liked that I could get them for about $1. And sometimes I'm a real simpleton like that, JC. I like round numbers. I like easy numbers. And so I was attracted to that. But once you talked me into it, January actually did make a whole lot of sense. And I love the cliffhanger there on your chart there. You said we bought the calls for approximately ... We paid $1.85 for them.
As opposed to a dollar.
Right. So that 85 cents bought us 4 more months. And hey, if this thing gets going like we think it can, and the short sellers have to cover, I think, it's a $9 stock right now. $20 seems like crazy far away, right? That's 100% gain. But this, mind you, this stock has already gained 300% year to date. And man, I mean, look, we're talking about the Bitcoin cryptocurrency space, right? Nothing's off the table. Moves can happen like crazy. I mean, just look at that, the highs in 2021. This stock was a $75 stock at one point. So can this thing get to 20? Yes. Can it go beyond 20? For sure. And boy, the options market is giving us an opportunity to get positioned cheaply. So I like the position. And look, it's a defined risk trade. If we're wrong, we know what we're going to lose. We're going to lose what we paid, that $1.85. Hopefully we'll lose less. My stop on this thing is $8. If the stock goes below $8, that's my signal that we're wrong or early. Hopefully we'll lose less than 100% on these calls, but I'm fully prepared to do that, JC, if that happens.
No question. So you already have a built-in risk management procedure in place because you can't lose more than $1.85. That's the most you could lose. So position size accordingly, but that's it. And then if you want to add another layer, I like what Sean is doing here. If it starts breaking below 8, things are likely getting messier. This consolidation that we're betting is going to resolve to the upside is most likely resolving to the downside, right? And whatever you can salvage at that point, I think is worth salvaging as opposed to losing the entire $1.85. So you have kind of like a double risk management in place. Okay, great. That's to the downside. It helps us sleep at night, which is most important, right? If you can't sleep at night, it means you're too big. And what's the sense of doing this in the first place? So now that we're sleeping, how much money can we make in the off chance that we might get this one right? Because it does happen. And I think, in fact, the probabilities of success on our side, Sean said, this thing's tripled off the lows just year to date. This thing's already a triple. So the momentum, the trend is to the upside. This has been a healthy consolidation by the looks of it over the last 6 to 7 weeks. Consolidations tend to resolve in the direction of the underlying trend, which in this case is up. And if we are right, the potential profits are exponentially greater than any risk that we're taking, which is $1.85 or less in this particular case. I mean, think about it. These are the 14s. If you're talking about 6 points in the money, right? I mean, with plenty of time left, potentially, if this thing starts to move this summer, I mean, this has the makings of what could potentially be the best trade we put on our year. And it's a high bar because we've had some big winners, but this has the potential to be that.
Yeah, absolutely. And that's what I love trades like this. I love trades that allow us to get positioned in a very simple position. In this case, just long calls. And, we're not betting that the stock's going to go to $75, but we're putting ourselves in a position to potentially get lucky. And I know you hate to talk about luck, and I'm not saying luck, but we're creating our potential luck, right? We're creating the opportunity for this thing to really rip, and we'll be positioned to ride it.
We are putting ourselves in a position to potentially become very fortunate in an appreciation, right? Like I told Morgan's like, oh, we're so lucky to meet each other, my wife. And it's like, well, we were both at that charity event, at that bar in the East Village. We put ourselves in the position to succeed. And sure enough, here we are. We are putting ourselves, we are laying it out there, out on the line. But the beauty of it is that we're putting ourselves in a position to benefit tremendously, but we are minimizing our risk. We're not betting the farm, right? We're actually in a very controlled position, which I really, really like. And like I said, getting back to sleeping at night. So volatility was cheap. If volatility was more elevated, we could potentially sell some out of the money puts to pay for those calls that we bought. We could potentially sell even further out of the money calls and create a spread. But in this particular environment with ultra low volatility, we can position ourselves in a nice opportunity here, in my opinion. And obviously, Sean, we worked it out. We had a few different ideas, a few different expiration months, but we all agree, I think, that this is the best place for us to put our money today. Long Mara January 14 calls for about $1.85. You can get the Septembers for $1, but I like getting it 4 more months for 85 more cents. We all agreed that it was worth it, so we went ahead and pulled the trigger. And then, Sean, let's talk about the upside. If we're able to sell these calls for twice what we paid for it, so check my math. That would be what, 370? If we could sell, if we can get to 370, we'll sell half the position and let the rest ride, and we have a free ride until January of next year. That would be best case scenario, right?
Yeah, that's what I like to do in trades like this because look, when you're buying out of the money calls, you really need to get your timing right. And when you're sitting on some profits, it's always good to take a little off the table because it's, I don't want to call it a long shot. It's not a long shot trade, but it's a trade where, all things being equal, you have less than a 50% chance of being right. So whenever the market gives you that opportunity to at least take your original risk capital back so that you can't be hurt no matter what it does, I like to do that. That's my best practice when I buy long calls. I'll sell half when I've doubled my money, and then hold the rest all the way to January, and come what may. Hopefully it screams to $100 a share.
You'll hear no complaints from me, Shawnee. So listen, I appreciate that. I always love thinking through these ideas. Already in today's morning show, I was already coming up with some ideas. We were getting some questions from the crowd. You were in there heckling us as well. So guys, we're buying the Mara January 14 calls for about $1.85. We're going to take half off the table if we can get it for a double and let the rest ride till next January. Shawnee, baby, always a pleasure. I will see you probably tomorrow.
You'll see me tomorrow on the morning show. I'll be on the morning show.
Oh, nice. See you guys at the morning show, 8:30 a.m. Eastern time. We'll be there till 10. And Sean will be joining us. I will be joining remotely from New York City.
Ooh, all right. Fancy.
Who's fancy?
All right. Take care, everybody.
All right, guys. Adios.